the go private involves a lot of things have to come together to make that happen. The market's got to be conducive to that. The financing, the capital markets have to be conducive to it. I think, you got to understand why you want to go private. What's the point of that transaction other than perhaps a financial transaction? Is there a reason from a strategic perspective for that company to do that? Does it help facilitate getting to your goals and objectives and building to your vision? Or is it, and if it is, then maybe it's an interesting thing to do, but it's clearly a complex transaction with lots of potential pitfalls along the way. At the time of the LBO, when Michael determined he wanted to take the company private, I was the controller of the company, so it was myself and a few other folks, including the CFO at the time, Brian Glad, and a small group of us that really handled most of the financial work around the go private transaction, whether that was the due diligence work with the various private equity firms, working with the investment banks around valuations and fairness opinions, making sure that we had the appropriate forecast, and quite frankly also making sure that we had the right relevant focus in not getting the broader organization distracted. So we kept the team of people working the LBO relatively small and wanted to make sure that the financial team in general was more focused on continuing to build the business and continuing to drive the company forward. It was a great experience doing the go private. It's obviously one of the largest go private transactions in history. Interesting to watch the governance process. Very interesting to watch the how the board maneuvered its way and made sure that they had the right sort of governance structures in place. And ultimately, dealing with the banks and the private equity firms around the financing was an interesting process as well as we placed the debt to finalize the transaction. So I think our decision making is better. I think it's faster. I think we're more nimble. We're clearly driving the organization to be more entrepreneurial-like and take some calculated risk around ensuring that we try some different things with the business and that we continue to build on the capabilities and solutions that we have. We're constantly looking at our business management system and the metrics that we run the company with. We're focused right now, as you might imagine, as a private company. One of our primary metrics is cash flow, cash generation. So, building out metrics at a business level around cash efficiency, cash flow. How do we make sure that as we grow, we grow profitably, and we throw off cash, and we make sure that we capture those metrics. What we're trying to do is ensure that we have the right measurement system in place such that we can monitor the health of these business units with some of the new metrics that we're building. As a private company, I would tell you about 80% of what I do is exactly the same. I still have to have financial statements generated every quarter. We still do earnings calls. They're just with debt investors versus equity investors. And I still talk with analysts. They're debt analysts versus equity analysts. So a lot of that is the same. What's a little bit different than how I thought it was going to roll out was I'm spending actually a little less time with the banks and the financial institutions than I thought I would. I thought that given the level of debt that we took on and we're clearly made good progress on delevering the balance sheet, that I would spend a bit more time with the debt side. That really hasn't been the case. I talk to them occasionally. We talk to them obviously on a quarterly basis, but they have not been as much. They have not taken as much time as I thought they were going to take. Also, our equity partners, Silver Lake, they have been good to work with. They haven't been terribly intrusive. They're not into the day-to-day, but we keep them updated on a weekly basis about how we're doing. But I think part of that, obviously, is that the business has performed reasonably well, and it has allowed us, again, to delever the balance sheet relatively quickly. And I'm sure that if the business wasn't doing that great, that I'd be getting lots of help. But so far, we're up to a really good start. I do think that in terms of things that have changed, is clearly some of the debt has changed. We obviously have debt covenants and compliance matters that we've got to make sure that we had to build new processes and systems around that to ensure we capture that information properly. I do think that I am spending more time personally around some of the strategy and around how the business is growing and areas of investment opportunity and how we're building some of the capabilities. I'm clearly spending more time we have a venture group, a venture fund that we invest in startup companies and new technologies, and spending more time in that area. So some of these areas, not maybe perhaps traditional core finance, but are extraordinarily important to the company and to its success in the future, and I'm spending more time in that area. I found the whole process of the board governance pretty interesting, making sure that we had the right governance model in place, and then, quite frankly, from my own education, dealing with the private equity firms and dealing with the banks about how they thought about the transaction, the types of financial metrics that they were interested in understanding in more depth. And then, educating the teams and the people that were looking at us around what is our business model and what do we look like, both from a PC perspective as well as our broader capabilities in those solution areas that we're building around data, around cloud, around security, and how Dell has evolved over the last 3 to 5 years. That was an area of interest for me.